Opening scene calm, reflective tone. What if the problem isn't how you spend money, but why you feel the need to spend it in the first place? Because for a lot of people right now across the United States, the UK, parts of Europe, something doesn't add up. You can be earning a decent salary, you can be working full-time, you can be doing everything right. And still, at the end of the month, there's barely anything left, not enough to feel secure, not enough to feel ahead. So the natural conclusion becomes, I must be bad with money. But what if that conclusion is wrong? Seeing too realistic scenario. Let's take a simple, realistic example. Someone in their late 20s, working in a mid-level role. They earn around $70,000 a year. Sounds solid on paper. After taxes, that's roughly $4,200 per month, depending on where they live. Now let's look at where that money goes. Rent $1,600 car payment $450 insurance $180 groceries $400 student loan $350 phone subscriptions utilities $300 that's already around $4,280 and we haven't included eating out, occasional travel, clothes, or anything unexpected. So realistically, the remaining money maybe $700 to $200 is what's left to live life. And that's where things start to break, seeing the hidden pressure. Because life doesn't exist in a spreadsheet. You're not just paying for survival, you're paying for normalcy. You go out with friends because staying in every weekend feels isolating. You upgrade your phone because everyone else already has. You finance a car not because you're careless, but because it's what people at your income level seem to drive. None of these decisions feel reckless. They feel reasonable. And that's exactly the problem. Seeing for the wrong signals. Most people don't realize this, but they're not making financial decisions based on math. They're making them based on signals. Signals from social media, signals from coworkers, signals from what people like me are supposed to have. And these signals are incredibly powerful because they don't feel like pressure. They feel like normal. Seeing the math behind the mistake. Let's zoom in on one decision. That $450 car payment seems manageable, right? Now stretch that over 5 years. $450乘60 months 等于$27. Add insurance differences, interest, maintenance. You're easily looking at $32,000 to $35,000 for that car. Now imagine if even half of that, say $15,000 had been invested over time instead, at a modest 7% annual return over 20 years. That turns into roughly $58,000. Same money, different signal. See. 6. Why smart people still fall into this. This isn't about intelligence, it's about psychology. Humans are wired to compare, not with billionaires, not with CEOs, but with the people around them. Your coworkers, your friends, people your age, in your city, with similar jobs. If everyone around you is financing cars, upgrading apartments, taking trips, then not doing those things feels like falling behind, even if, mathematically, you're actually ahead. Scene 7. The system flaw. There's also something deeper happening. The system itself quietly encourages this behavior. You're offered credit before you build savings. You're approved for loans based on what you can pay monthly, not what you should pay long term. You're marketed a lifestyle, not a financial outcome. So you end up optimizing for monthly comfort instead of long-term stability. Scene 8. The slow consequence. And the cost isn't immediate. That's what makes it dangerous. It doesn't feel like a mistake today. It feels like life until a few years pass and you realize you've been working consistently, but your savings haven't grown, your stress hasn't decreased, and your options haven't expanded. You're not in crisis, but you're not progressing either. Scene 9. A different way of thinking. Financially aware people don't necessarily earn dramatically more, but they interpret signals differently. When they see someone upgrade their car, they don't just see the car, they see the cost of that decision over time. When they consider a higher rent, apartment, they don't just ask, can I afford this monthly? They ask, what is this replacing in my future? Not in a dramatic way, just calmly, logically. Seeing 10. Subtle shift in perspective. Because money isn't just about spending or saving, it's about trade-offs. Every $500 decision isn't just $500. It's what